Good afternoon, Maverick traders. It's Joe with you here for a market roundup the 28th of March. Hard to believe this month is already gone as the snow still sits on my lawn. But it doesn't feel like March. Lo and behold, folks, it is almost over, which means we are on the cusp of earnings season. I've got 2 cents about these markets. You're going to listen to it if you'd like and take responsibility for the outcome. So let's get into the market analysis as it's been super difficult as of late. We're getting a lot of pretty interesting announcements when it comes to both bullish and bearish sentiments. And so far, they're just kind of playing tug of war with each other. It's super, super choppy. So how did we finish? Flat. Dow, the S&P, the NASDAQ, flat. Russell's as well. Oil and gold had a little bit of a tick up, but this is also coming off of a week that we saw that flip-flopped. Dow, the S&P, and the NASDAQ were higher. Along with the Russell, the oil and gold were actually slightly lower, so it just depends on what mood the markets are in. I don't know. That's what I wanted to talk about. So we do have that choppy markets continuing, creating a volatile consolidation pattern. I'll show you the SP chart. But the banking problems took a back seat last week, but the markets reacted to some of the aftermath, and I thought was pretty interesting. Intraday, the markets were pretty much flat after a slight move, open lower, and then they just kind of tapered off, and it looks like some of the detail on the SVB Bank came out, and here, check out this little article here, folks. The run on the bank, $142 billion in 2 days. So there is doubt, or at least a panicking public, or enough of a domino effect to where it was the deposits of money was pulled out of that bank in droves, creating a big situation. So I keep getting this one side of the coin versus the other. Okay, I see the markets are going up, the optimism, and we're going to think things are going to be better in the future. But when it comes to your physical money, $142 billion in 2 days is people that do have little confidence moving forward. And so I think that's what's creating this choppiness. Over to the advanced decline line, we've got 47.49, absolutely flat day. You can see the intraday, we were flat, we went down, we came back up a little bit to close just slightly lower, so no one really went anywhere. Above and below the 50-day moving average, we're still on the pessimistic side of that, as we do have a lot of really good bear rallies to as of late. So if you guys are looking at your charts, make sure you just don't abandon them yet, because there's some good trades. Doesn't mean I have seen any that I want to trade today. So let's get into this topic of the symmetrical choppy triangle pattern, because it's a good one. It's just not very uniform. Usually you get, boy, I'm trying to find something here in the SPY that is uniform. It's been pretty choppy, but this area right through here, here's our little symmetrical triangle pattern. But these last few days have just been bipolar, for lack of a better term. Gaps up, goes down, gaps down. It's all over the place. And I believe I've said this before back in this area a couple of weeks ago, the end of February, if I remember right. It wasn't until I see a slide off that actually started to make sense, and then the recovery. So far, we are actually in a symmetrical triangle pattern, but you could argue that it could be more pessimistic than optimistic, since we do have the 2050 cross. This SPY is above the 20 but below the 50, so this could be, let's put more emphasis on the downtrend here. If I can get my pin back, this could be more of this type of channel happening here. We'll see. So a roll over to the downside would make sense. This is pretty difficult because it is the SPY. We know that it's got that massive bank problem, or it absorbs, I should say, a lot of banks that are going through that issue. And sympathy, we'll see how deep that onion goes. So I'm kind of neutral on that one. The NASDAQ itself looks like it's just rolling over for a bull pullback. And the reason being is because it already got all the way back up to its resistance areas. So it doesn't have that contourly downtrend. In fact, I can draw this here that the SPY does. See, the SPY is still playing right around this area, where you can see this NASDAQ has blown above both the 20 and the 50. The 20 never did cross. Let me erase my pen. The 20 never did cross the 50-day moving average. So this was not specific to tech. This was an absolute reaction to maybe the Fed being, at the 25 basis points worried about the slowdown of the economy, which I truly believe these markets don't believe is going to happen, or they've already absorbed it. That's my 2 cents. However, it doesn't affect the expectations of what people expect out of tech moving forward. Like I say, we're getting into earnings season, and we'll see what those numbers come out with. So I'm just taking a look at this as a bull pullback in the Qs, where I think the SPY is something a little bit more ominous. Now, taking a look at the heat map, it's exactly what you would expect it to look like, just brown, because of what we saw in today's action with the flat close. A little bit of the strength there over here in the energy sector. You guys could see basic materials. Everything else was just kind of push me, pull you. Didn't really go anywhere, but choppy. Very difficult market to trade. If I was back on my day trading days, I'd probably have been through a whole bottle of Tums, just because the acid in my stomach would go gnarly. So take a look at that. When I've got green light, red light, yellow light, that means nothing. I'm above the 20, below the 50, which, folks, I flip-flopped those last week when I did this class, because it was below the 50 and above the 20. It's just crazy. Or excuse me, you got those backwards. Below the 20, above the 50. So the slope's off. I'm still going to say pessimism. That's why my monthly outlook is definitely -1, just because of what's going on in the banks, just because of how hawkish the Fed is. And we're seeing some slowdowns in some of these news headlines. Micron actually came out, I'll say it again at the end, and they just had horrible numbers, but they're planning on firing a lot of people. Disney's doing the same thing. So we'll see if that carries over into, quote-unquote, the real world, right? All right, so I'm flat with a little bearishness in the longer term. That being said, I did go through and I found a couple of charts. We got First Solar, ABBV on the upside. I believe those Corey talked about those on the front on last weekend's class, and then Tesla looks good sideways, but it's a tough one because it's so large. 3M, Duke, and Disney. Like I say, Disney is on my watch list. I want to see where the reaction goes based on the investors and how many employees they're actually going to terminate, things of that nature. So First Solar does have a pretty good chart here. I like the high base here, or ascending triangle pattern. I guess you could call this a high base up through 200 to the 215 mark. So I want to see if it's going to actually float above that. This is in the tech sector, which I truly think is an outperformer, or at least it's the more optimistic of all of the sectors out there for now. So, be patient with these. Diagonal spread it. Don't do anything huge. Don't expect a big move up. One that, like NVIDIA, if you guys see that, that's just gone parabolic, and it's just going to go all over the place. But these you can slow play if you'd like. Try to play that choppiness, but don't let it scare you. Here's ABBV, very similar situation. This is kind of a great example because you can see it just poked its head above the 156 resistance there. And I don't think it's going to do much but kind of float higher, but it's a good opportunity for a diagonal call spread. Tesla, it's making a case for a sideways trade. It has a few times before. It might be beginning to do a symmetrical triangle, but I'd be pretty comfortable playing it above 80, and in the shorter term, maybe 200. So 180, 200, excuse me. So somewhere in here, and that's a pretty good range. That's a $20 range. It does have the potential to slip with whatever Elon's tweeting and all that stuff, but it just seems like it might be going quiet because there's other more exciting things out there. If you guys catch my drift, but we'll see. We'll see if it can stay there. It's a tough one. I might watch it for a few more days before I take any sort of action on that. Now here's 3M. Been on the bear watch for quite a bit. I like how it rolled over the 105 mark right when it hit this 105, and then it just kind of just fizzled out. I think 100 might be a pretty good support on this, so something sideways to down, or maybe even a credit to the bear side. Let's move over to Duke real quick here. And Duke just looked like it was in a nice bear rally. It was on a bear watch list that we had done last week, and or it came through our midweek class. And I just liked how this channel was working. Was thinking that, oh man, if it could break, that'd be fine. But it's having this nice little anemic bounce. I'd like to see it roll over. I like the two side-to-side dojis. I wouldn't be surprised to get maybe a little bit of a hiccup up to 96 first. So be patient. Wait for it to confirm first. Short term or more reserved target 92. More aggressive 90, 88, stuff like that. All right, and then the last one is Disney. I'm ready to go bearish on it. Super charged up. Let's do this. And then I saw the little article come out, and it's kind of parked itself. If it can stay below that 95 level, maybe slip lower. Just depends on how bad those numbers are and how they're trying to retain it based on how many people they're going to fire and things of that nature. So it's kind of this holding pattern as well. So like I say, all these stocks are good. They just really aren't making me go push the button just yet. All right, folks. Well, what are we left with? Well, the markets are in a bit of a chop. And what I mean by that, we have a couple things pulling and pushing in a couple different directions. We have an optimistic tech sector, or at least the investors who put their money into tech. I think it could be a lot of the fear of missing out and, hey, this stock is going to be great again. Then we got a bank dilemma that kind of came out of nowhere in the financials specifically, and it has carried over into the SPY and some of the larger sectors. And then we've had for a while the Fed doubted. The Fed came in and actually raised less than they were going to, and I do believe it was in light of the bank. So it's not like they're not sympathetic, but they're seeing something down the road that these markets really do not agree with. So I think that's creating this chop, and it's going to be very difficult until somebody's proved right, until we can get a substantial move up or down. We talked about this the middle of last year, that when we do get a correction, we might see a whole bunch of choppy sideways trading for the majority of 2023. Didn't seem that way in January, but it seems like we might be doing that as we exit March. We'll see what earnings does. So we still have a very active and employed consumer. We have the pending home sales house numbers tomorrow. New home prices have come down, but they were revised higher than expected. They're not falling as fast, and I think that's a good thing, actually, considering the interest rates more than doubled. It's nice to see something wane off instead of crash. That's actually part of a soft landing, quote unquote, which is some of the reasons people are doubting the Fed. So we'll see where those numbers go. But the employment number and the ADP employment number and the unemployment numbers are actually kind of flat. I have seen a couple that actually ticked in the wrong direction, so it's going to be interesting. Earnings reports, like I say, we had Micron. Totally just, they missed their numbers on all fronts, but they're firing a bunch of employees and they're doing a lot of revisions. That stock is actually, it was up for the PM. Now it's trading flat. Lulu, on the other hand, blew it out of the water, and it's up over 12% right now. So keep an eye on those. Check potential trades as you guys go. All right, thanks for joining me on a Tuesday. I hope you guys have a great rest of the week. We'll talk to you soon. Bye, everybody.